GM, just a quick one before we get going. So, as you know, the Blockmates podcast is for informational and entertainment purposes only. Certainly shouldn't be considered as financial advice. We have absolutely no idea what we're talking about half the time. So, any investment decision you do make should be based on your own research and your own understanding of the risks involved. One more thing as well, there's around 50% of people who listen regularly who aren't subscribed yet. So, if you please could just do us a favor and hit the subscribe or the follow button or the like button, helps content grow, helps us grow, helps it reach more people like yourselves, and it means the world to us as well. So that's the last I'll ask of you. So yeah, let's get to the episode. All right, I think that might be long enough. so me and 563 are back. Been away for a couple of weeks. I've been getting married. We've all been doing some funky stuff. A lot of the team have been out all over gallivanting all over Europe. But yeah, we've got a good topic today, like something that everyone loves. It's looking at projects that haven't launched yet, and if there's any information around the product, and when marketing, when TGE, when token, all that kind of good stuff. But first, 563, how have you been?
Doing great, man. Welcome back. You missed a lot.
Thank you very much. I know, yeah. So Jerry was given just a constant hourly update on the price of Bitcoin throughout the wedding weekend. I was like, all right. Thanks for that. Yeah. But no, yeah, it was like kind of needed it. Bought a lot of Bitcoin before I left. Weddings aren't cheap, so it kind of helped me out a little bit there. So yeah, congrats to the market participants. But it's nice to see a bit of a, everyone's been nice to each other for a change.
Imagine that.
I know. What have you been up to? Have you just been doing some research, writing content stuff?
Yeah, man. A few articles for Bankless just dropped, and yeah, just keeping on my toes. Lots going on in the industry these days.
So much, like really difficult to keep on top of. And I think before we jumped on, we were just saying maybe we'll do one of these, maybe once a month, because there's going to be so much that comes onto the market, particularly as everyone's been nice to each other. People might see it as a good opportunity to go out market. So I think it'll be a good segment.
Yeah.
All right then. So, what do you want to do? One for one, and then we'll leave the. So what we'll do, if anyone's listening, if you listen on Spotify, we might bring up some of the important tweets or threads or stuff like that, but you're not going to miss out too much. We'll talk you through it anyway. So if you are listening on YouTube, you'll probably get to see that. But yeah, we've got a handful of projects. Just going to talk through them, and yeah, we'll just go for one. Do you want to kick off with your first one, and then I'll just act like the idiot in the room with like a lot of your stuff, because there's a few on there that I haven't looked into, and there's a few that I definitely have.
Yeah, sure. Yeah, we can just go back and forth. We can kick it off with mine. First one on my list is Ion Protocol, which is pretty cool. It's a money market for any ETH derivative that you can think of. So we're going to go through different parts of our research. And so the first part is like how we found the project. So for Ion, I was going through liquid restaking tokens because I was diving into EigenLayer a bit. And I was just trying to find out how our degen's going to gain leverage over these LRTs, because that's going to be part of the play. You get these liquid restaking tokens. All right, how do I borrow against it? And how do I loop this? And how do I make this as crazy as possible? So that's how I stumbled upon Ion. They just got through a $2 million seed or pre-seed from a bunch of VCs and angels. And yeah, let's just go through how it works. So EigenLayer, they have this concept called AVSs, or actively validated services. And that's any protocol that wants to leverage this existing underlying layer of ETH security that you get from all of this like monetary value of ETH that's being staked. So with EigenLayer, you get to use that monetary value to restake and basically use that validator for not only validating Ethereum, but also other services. So I really recommend watching EigenLayer, because I think they're going to be a key part of this new cycle going forward. And protocols building on top of it are getting to do some really new and interesting things. So definitely watch their Twitter and their blog, just because there's going to be highlighting a lot of cool projects, I think. But anyway, yeah, so the problem surrounding these new derivatives is there's a ton of these new derivatives. So you have liquid staking tokens that we all know and love, like Steth and Rocket Pool ETH and Frax ETH. But now we're going to get these liquid restaking tokens. So the same idea with liquid staking tokens, you have your underlying position of ETH that's being restaked through EigenLayer. And a liquid restaking token allows you to have a coupon for that token pretty much and go and use that throughout DeFi. So you can borrow against it, you can lend it out, you could LP it or something. So you have that, you have LST LP positions, you could have ETH LP positions, but there's not really an easy way to borrow or lend against anything besides the most used ones. So one of the main reasons why Lido's Steth became so proliferant and like far reaching as it did is because it was one of the first to get an Aave lending market. So people could actually go and get some leverage on their Steth. But there's not really a way to do that for everything. So that's where Ion comes in. They have this way of modeling risks based on of these ETH derivatives based on the validator hardware itself. So if you think about it, all these ETH derivatives that are being staked rely on some underlying security of that validator network that it's using. So if the validator operators or the validator hardware is no good, that ETH is probably more at risk. Have you ever used rated.network before?
I haven't.
It's pretty cool, sir. It's a free website. You can just go and check out rated.network, but it goes through like how effective all of these different LST providers or basically staking pool providers are. You can go through and see how effective they are, basically how risky they are to being slashed, that sort of thing. But if you think about that and then just apply it to all the ETH derivatives that those validators are responsible for. So that's basically how it works. It's trying to understand how risky on a consensus layer these validators are, and then applying that risk judgment to the ETH derivatives that those validators are responsible for. So it monitors all this consensus layer info from those validators themselves and not from oracles. So if you think that's kind of how lending markets accumulate bad debt, is they monitor info from oracles, there's a sudden price drop and not able to liquidate people fast enough in order to get all the debt back to make up for what they just lost. And by monitoring at the consensus layer, you don't have to wait on that delay from oracles. So that's one way they're trying to avoid bad debt accumulation. And you can kind of fine tune those interest rates based on what kind of collateral type there is and what kind of validator sets they're using. And they're also throwing in some ZK enabled proof of reserves. So there's so you understand what the reserves are there, and there's attestations over time, and you can kind of prove that what the validator is saying is true. So I think it's pretty cool. It's a way to get really good loan to values for those short tail LSTs like Steth and Reeth, but also actually get leverage on the long tail because that's hard to come by. So I think it really fits into those narratives of new LSTs coming to market. You see a lot of LST products going live right now with Prisma and all that. So it's definitely still pretty hot, and as well as LRTs coming online with when EigenLayer fully goes online, and all that adjacent tech. Ion's just going to benefit from that. There's no token yet, so that's part of why I'm still a little hesitant on it, but it's pretty cool. I'm excited for it, really. It's an untested design, so that's part of the bear case for it, but I'm watching it pretty closely.
Yeah, it seems really, really cool. I really like the idea. And like the more I think and more I look at EigenLayer, it looks like it's kind of just creating this open free marketplace for one, additional incentives and rewards by securing additional networks that might not just be the L1. And then the other side of it is like you're creating this risk and slashing potential marketplace, which is really, really interesting to see kind of play out. Because, and some of the really interesting questions, we were speaking about this today, is you're probably going to see, well, you're already seeing EigenDeer.
Yeah.
Mantle are going to reuse that. Who's going to be, I don't know, what if you had an Oracle network that was using eigenlayer to secure its kind of nodes in that network. And then you're just going to see this whole ecosystem develop. And as you were saying, the amount of adjacent protocols that get built in on top of or around this whole, I don't think people can really comprehend what this is actually going to do. I know we've kind of seen some similarities with like how the LST market has progressed, but this just opens up a lot more verticals, in my opinion. So it's something definitely to keep a close eye on. Ion looks really good. Looks like it got some strong backing as well. 2 million pre-seed seems a bit bit funky, but
that's a lot of money, right?
Yeah, particularly if you're going to try and raise a seed at, but like we don't know how big these
allocations are.
Yeah, we don't know how big the allocations. We don't know how big this potential area of the industry could be.
Well, if
so
you
I
think
don't
of
know.
it like an Aave competitor, it could be pretty massive.
Yeah,
if that's
yeah, and like, and Aave is not gonna like Aave is notoriously difficult to have your asset listed. There's a lot of governance, massaging, political bureaucracy and games that get played there. And like if these guys are like solely focusing on, all right, we're looking at LSTs and we're looking at LRTs, and like that's their domain, and they've got like I don't know if they're going to work with like someone like Chaos Labs or if there's like an even more bespoke kind of risk management firm that kind of helps people with these kind of things. But you know, it's I'd be happy to see someone gain market share on Aave. As much as I love Aave, it's like
it's good to have competition.
It's good to have competition, and it's good to shake up governance incumbents. I think because a lot of stuff just gets stuck in the mud with like these OG DeFi protocols. So it's and if these go ahead and do it, and I suppose it serves as a live test case for what is possible, and then like Aave go and implement it like off their own backs of the set, use like the likes of Ion to use it as a positive test case, and then they can go and assess based on something that's live in a live working environment, and then it gets opened up to the masses. So I'm all for it, and I think like innovation like this definitely pushes like the full industry forward. So very, very cool. Would like to see what the token dynamics are like, but yeah, very cool.
Yeah, it's definitely one to watch. And there was actually a good podcast on the Flywheel podcast, so check that one out. They went into a lot more depth. I can link that one too.
Sweet. Yeah, love the Flywheel guys. So my first one, right. So I'm going to preface this by saying I'm not going to bore everyone to death with tapioca again because I do it every single time.
I was going to put that one
too. I do it all the time, and yeah, seed investor in that. And Matt's coming on in a couple of weeks anyway to talk about the RIP liquidity mining epilogue that he's wrote, which is
nice,
about 10,000 pages. But it's he's such a good writer. If he wasn't such a great builder, I'd be like just trying to tap him up to come work with us because he's so good at like getting his point across, and he has so many like really good thoughts on the industry. But yeah, I'm not going to bore everyone to death on tapioca. So and as I was pulling some of these together, I was just saying to 563 before we came on, I was like, I could have did 30 protocols I'm really interested in, but I think these are kind of subconsciously top of mind because they're quite relevant, and there's TGs coming up for them, and we'll get into it. But the first one is Good Entry. So Good Entry Labs, and the handle on Twitter is Good Entry Labs. So you'll be familiar with this because we've spoke about it previously, but there's a whole kind of wave of new derivatives that are coming online that are looking to leverage lending and borrowing markets and the idle liquidity sat outside the current tick on the likes of UniV3 or other concentrated liquidity AMMs. And so Good Entry, like their tagline is protected perps native to Arbitrum. So their whole shtick is, look, there's definitely a way to kind of gain additional leverage exposure through margin from capital that's sat outside the current tick range that's being used on a concentrated liquidity AMM or lending and borrowing protocol, or the combined of both effectively. So how I found this was I kind of seen their little green mascot and their little green thumb popping up all over the place, and Like usually I have a rule of 3. If I see it in 3 different places, I have to go and check it out. And then coincidentally, I actually had a call with Ouroboros Capital because we were going to meet up in Singapore. And he and the team are like advisors on good entry. And I know our thoughts on a lot of projects are very, very well aligned anyway. So I was like, well, this guy's definitely kind of backs up my own thoughts around the project. So I really like that we're pushing the kind of boundaries of what's possible in the kind of AMM space, and then really open design space, even on UniV3. I think there's such a demand for long tail perps and a lot of current, whether it's like a general GLP liquidity model, whether it's a GMX V2 style model with kind of like synthetics, like a high beta on the ETH-USD pair, or then getting onto like a constrained central limit order book kind of model that the next project I'm going to talk about actually gets onto. There is such a high demand for long tail assets on chain that you can gain leverage exposure to. But the main problem is no one really wants to get stuck holding the bag if something's getting short to death and something's like flavor of the week, and then no one's going to provide liquidity via the counterparty to that. Whereas this kind of rectifies that. And the whole idea is on top of the potential for long tail assets to have perps, the beauty of it is, and the whole protect perps knit to our Arbitrum tagline comes from, is how many times have you opened, well, hopefully if you've been a very sensible degenerate, you've used the stop loss, but there's been 1,000,001 times, everyone sees it, you get like the orders in the books get removed, you get a scam wick down, your stop loss gets hit, you're already asleep. But then what happens? The position rebounds and your thesis around the original trade gets fulfilled, but you're out of your position and you're sat in cash. So like these scam wicks that kind of cost people an awful lot of money and definitely get hunted on certain centralized exchanges. The way that these perps are structured, that doesn't happen. So the problem that is getting kind of rectified here is the liquidation happens over a period of time as opposed to the current price. So eventually, over a period of time, you will have paid more in fees back to the people who are providing liquidity that effectively your collateral down will have been kind of eaten into. So that's the way that kind of works. So it's a different take on it. So it's never liquidated by price. It's only liquidated by time. So it's a really kind of unique product in that regard. And what's really interesting is KuCoin have actually just created something very, very similar. And they're obviously looking at like the DeFi space for innovation and then going to go and try and implement it. So a couple of the other factors about it are, I think leverage is only up to around 10x. I don't know if that increases going forward or what, but again, the kind of like the dynamics of how it's set up, you're looking at around 10x leverage. I don't know why you'd need any more than that personally, but I know some people in the blockmates community that's chump change to them. But and like if we're speaking around narratives, I think we've spoke about it previously. I think the whole design space of the AMM's definitely opening up. Everyone's looking at perps and thinking, how do we get the best product created? Because I don't necessarily think it's been 100% cracked, particularly on chain yet.
Right.
And I love these kind of new primitives that are coming online to try and test the boundaries of what's possible. Is it going to be the final product that wins? I don't know. Maybe it is, maybe it isn't. But at least it's kind of pushing kind of innovation in the right direction, I think. Met the team in Singapore. They're all great. Like, all just really, like, you know people are in it for that kind of right reason. There's nothing like here that's a bit untoward. Like these just good people building in the right kind of in the right direction. Just want to push like innovation in the space forward. So like I'm all for that. Token details, which everyone's waiting for me to stop waffling on. There is going to be a token. So this is expected to be from 27th of November to the 3rd of December. It's going to be hosted natively on the website, on Arbitrum, billion tokens. FDV is only 10 million. There's no locks. So you participate in the liquidity bootstrapping event, and then tokens are effectively live to the world. So I like it. I think 10 mil, pretty good price point. Well, very, very good price point. Some of the private round deals that I'm seeing come across the desk are 2 and 4 and 8 times larger than this. So
Wow.
what have I put on a bear case? Always have to kind of present the other side, because if not, it's a bit stupid. So I think bear cases, there's quite a few protocols that are looking at this space as something that needs to be attacked. There's the likes of infinity pools, even UniV4 hooks. I think you can kind of implement this lending out idle liquidity aspect. So
right,
and like
you still have to build
that
all out, though, I think.
Yeah, exactly. It's what it reminds me of. Did you see the OpenAI announcement today with GPTs?
No, what was it?
So like UniV4 has basically just said, we have absolutely everything you need to create all these innovative dexes that everyone's just creating off their own back.
Yeah.
So GPTs, like from OpenAI, is effectively just went, oh, you want specific large language models. So you want like a large language model that is going to act as a, like all these startups have created a GPT around like a personal health and fitness coach, where it's it's trained in that specific niche. So they've just announced today where it's like, yeah, we're going to give you all the tooling for that, and effectively makes effectively makes all these like startups that can imagine that have raised an awful lot of money just completely redundant overnight. so
killed so many startups.
Yeah, so I'm worried about UniV4 and hooks just having a similar sort of, I mean, it's great for them, don't get me wrong, it's like all the innovation, but it's like, well, we have that, you can just do it here and you don't need to fork out for all the R&D and all the development, and we'll just help you do it. So I can imagine that is potentially a bear case for this kind of product. But and I also, when I interviewed CryptoFish from Trader Joe on Still Early the other week, he said he was delivering a presentation on this kind of thing to the team. So everyone's looking at it, and it's going to be, I suppose, just going to be another competitive space in the industry. But yeah, first one for me was Good Entry Labs, and TGE is 27th of November till the 3rd of December.
Really cool, man. Yeah, I think there's definitely a market for these long tail assets to get leverage on them. I mean, you can only get leverage on GMX on what, like 7 assets or something like that, 10 maybe. Yeah, so definitely it's really cool to use that idle liquidity because it's not going to be used elsewhere. So it even gets more money back to the LPer. So it's a win-win.
Yeah, exactly. Yeah, so they're getting, the LPs are, well, yeah, it is a complete win-win. Like the trader's getting protected perps, decent leverage for longer tail assets. LP, who is sat, particularly with that basket of liquidity, not within range, not earning any fees, and then it's getting lent out, they're earning trading fees, and then they're also earning the borrow fee. And if that asset's in high demand at any particular time, I don't know, there might be a huge catalyst at that particular point. They're going to get paid pretty handsomely, I think. So it might be a way to offset additional impairment loss, or
right.
There's a whole host of things that might be a remedy to that. So it's quite interesting to keep an eye on.
Yeah, you can go 10x long on Leroy Jenkins coin.
Leroy. All right, what's next for you?
Okay. Yeah, so next up for me is a new one, hasn't launched yet, obviously. It's called IntentX. It's for RFQ perps, so request for quote perps. That's kind of in like the intense space, and we can talk about how that works. So how I found this one, it was actually from the group chat with some crypto friends from Twitter, but ended up diving into it more once I wanted to learn more about intents, like Uniswap X and CowSwap, that sort of thing. So the real problem that it's trying to solve is the current on-chain trading all has its trade-offs. So if you think of the different models, you have like AMMs that you get in permanent loss or loss versus rebalancing, You have central limit order books, which are generally very centralized. So you have maybe something that can only exist on its own chain, like DYDX. You have VAMMs, like virtual AMMs, like GMX, that are very reliant on oracles, and they have a natural restraint on liquidity because you can only use the amount of liquidity that's in that pool. So intents, the idea is that market makers can fill your trades for all the people that are wanting to make trades on the platform. So a user comes to the platform, they ask for a quote for a trade in an RFQ, in a request for quote model, so an RFQ perp model, which is a subset of intents. So you go and you ask for a quote. So the market maker then comes back and offers their best quote. And these market makers, they don't exist solely on chain. I mean, they can get liquidity from a DEX, from a centralized exchange, from an OTC trade, or from like their own treasury. They just have to come up with a trade. So this brings, in essence, the best trade execution to the trader. So it doesn't matter if that best execution exists on chain or off chain. The person that's offering or that wants the trade gets the best execution in theory, and it potentially brings price discovery on chain, which is really what we want to work towards. Because these days, I mean, price discovery for, I don't know, a large portion of crypto happens on Binance, unless you're talking about long tail assets that maybe price discovery happens Uniswap. But it'd be really cool to see intents bring that back on chain. So it's being built on Base, which, has its own level of hype around it. And then I think intents and real yield kind of go into this too. But it's super new, the whole idea of intent-based DEXs and intent-based architecture. So there really aren't too much competition yet. But I'm really excited about IntentX because they're pretty early on the ball, at least for perps. There's a couple other programs that are building around just spot trading, like UniswapX and CowSwap. But perps, not so much yet. So their token, obviously you guys wanted to hear about that. They're doing 100% revenue towards the stakers. You get reduced trading fees, that sort of thing. And if you get, as like rewards for trading on their platform, you get like their staked version of their token. So people are incentivized naturally to unvest their token or vest their tokens over a certain amount of time. I think it's 16 weeks. But if you pull out early, there's a fee associated with that. And basically, you're rewarded for not vesting your tokens right away. So people that stake for a long time, their stake tokens end up being worth more of the underlying token over time because people are pulling out early. They take that forfeit and it forfeits it to people that are still staking. It's a pretty cool design, but I kind of wish they went with the O token design that Tapioca is using, where people have to put up their own INTX token, intents token, to actually earn more of the token or have some kind of buy-in to buy back the token for an option. That's more what I would have gone with, but it's still an interesting design to hopefully not have too much sell pressure. As far as a bear case, there's probably going to be a lot of competition in intent-based perps just because it's so new. But IntentX is pretty early to the market, so I'm definitely watching them. It remains to be seen if people are going to be using this more than centralized exchanges, but I think it's a cool option going forward. And yeah, they really need to entice the market makers. They call them solvers in an intent-based system. They have to entice these solvers to come to their network. So that remains to be seen if they can actually get the right amount of market makers over there. But yeah, I'm pretty excited about IntentX. I think they're on the right path, and they have a couple cool narratives behind it. So I think they're on the path.
Yeah, I literally spoke with their founder this morning.
Oh, no way.
Yeah. Really, really good dude. As you say, I think you started to see murmurs of it. There was always a couple of RFQ protocols, even before UniswapX. So obviously CowSwap's in that kind of vein. Hashflow, 0x. Like there's a few. And what's interesting as well is when we released that UniV4 article,
Yeah,
they didn't waste any time to then go and release UniswapX, which I found really interesting. And it feels to me as if, well, if UniV4 is more like an infrastructure product, and the AMM design space doesn't work out, well, we've hedged with an RFQ style system as well.
It really
So
flew under the radar too. I think.
yeah,
I think
have
hooks
have
were
you
the main
used it yet?
story. Not yet.
No, I see. Like it always prompts me to use it, and I'm just like,
I usually use an aggregator, but maybe I should
yeah,
try it out.
yeah. See, I know I should use an aggregator, but for some reason my muscle memory just always goes to matcha when I really like matcha. So
Yeah, they're good.
but yeah, it's like it's like I can't remember which. I think there was like a Lyra piece I did a while back where I was looking at spot market DEX volumes compared to centralized, and it's just like I think
It's
it's
not
like
even close.
5%. Yeah, it was like 5% at the time, and I think it's definitely gained on that. But I also think there was a lot of data that got skewed where it was like DEX volumes are all time high. It's like yeah, but like Jared from Subway is also at all time high, and there's a lot of like wash volume going through that. So we still got a lot to gain even on the spot side. But I think if anything, we could probably look to the spot market to see where the rest of the industry wants to move to. So I definitely see RFQ perps as being something to really keep a close eye on. I think you're right. I think there's going to be an awful lot of competition. There may or may not be one of those teams that I mentioned previously that might be looking in this space already. So it's like if you get like a already established spot RFQ protocol that then goes and rolls out perps, like it's a good example of that. Like Jupiter on Solana, they're an aggregator on Solana, so they'll plug in like Radiant, Orca, OpenBook, and shit like that, and then they've just effectively released their perps. Even though the perps is more like a GMX style model, but I can imagine as additional perps spin out, they'll probably act as an aggregator on that as well. So I agree on they really need to figure out. I don't think it's so much as a BD problem with regards to getting market makers. Market makers are going to go where they're getting volume and fees and like
Yeah, but it's kind of a cold start problem, right?
Yeah, and I think a lot of it's going to come down to who's got the best tooling, like who can onboard the quickest and who can onboard the most seamless, and like does there have to be heavy lifting from market makers? Because if so, there's going to be that level of friction, and there's going to need to be like large incentives to actually put the time and effort in to get over there and do that. But it's the same as anything. Like I suppose that comes down to like definitely a BD, but definitely a tooling problem as well. But like I think it's something to definitely keep a close eye on.
Yeah. You want to go over your next one?
Yeah, what have I got? Apologies, this isn't like a full perps deck show. There are others. But my next one is, and I chose this because it's nearing the TGE. We've been talking about it an awful lot over the past 12 months, I think, on blocmates.com on the research site. But Vertex Protocol, and this is another perps deck. Maybe it should be like the perps decks uncovered gems episode or some shit. But again, like what's interesting about this is a total different take on than IntentX and from Good Entry. So Vertex Protocol, if people are unaware, it's built on top of Arbitrum. They are a central limit order book. Also, kind of got an AMM underline as well. So it's this like their unique design of this hybrid club AMM for perps. There is an aspect of the execution that is settled off chain. So you're looking at like sub-second trades, one-click trades. It's like you're effectively depositing USDCE into the protocol, and then from there you're effectively in this kind of session almost where you've got a centralized exchange like experience with cross margin, lots of different pairs which are increasing by the day. It's just a really, 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 really good experience, particularly if you're kind of heavy in the derivatives game. And the way I initially found these guys were, so I think it came across like the desk on Twitter, and then I reached out to their founder, and he's like an ex-derivative trader from the UK, and like it's quite a interesting backstory actually, because these guys were near enough ready to launch on Terra of all places, RIP. And then I think they'd had like their initial investment was like 7 million and raised a decent chunk of money during that whole hype, and they probably got to raise an awful lot more based on how that ecosystem was going.
Yeah.
And then they didn't just say like, "Oh fuck it, it's collapsed. Like we'll give the money back to the investors." And they went, "No, let's go and port as much of this over as physically possible and put our heads down and like actually build on Arbitrum." And they did, and they've absolutely nailed it. And I think Jerry's got a podcast booked in with Darius in a week or so. And it's just been great to watch, because you know when you get this impression from someone after speaking to them that they're just gonna get shit done, and like I just knew, and I had absolutely no issues of talking about Vertex as much as physically possible, because I know it wasn't going to come back and bite myself and like the whole Blockmates brand on the ass, because I knew they were going to deliver, and they have done. And it's been just like nice to watch like proficient operators just go about their business, you know. So they again, narratives, I still think, put DYDX aside, I still think there's a huge gaping hole for a competitor there. And I think from everyone that I've used, I think that Vertex is as close to DYDX as you're going to get. And we actually did a little bit of modeling on this early days, because me and Emery, who is one of the contributors and writers at Blockmates, we sat down and said, well, what does this token price look like at these specific volumes? Because you can kind of work it out, work backwards from that. Because
sure,
if you get X amount of volume, this is how many fees you're getting, and this equates to X amount of revenue share. And what does that look like based on the total staked amount? Like how much fees are getting distributed by everyone who's staking? And if you can kind of like calculate it out across a couple of different APRs, like 5%, 10%, 20%, 30%, whatever, you can kind of work that backwards based on volume and work out like a rough fair estimation of price. So we did that a while back, and I think a lot of people were just like a little bit confused at where we were getting at for an unlaunched protocol. But like some of like the outlandish volumes that we were plugging in, they're beginning to hit now, and it's really good to see that. Yeah, we were definitely on the right page there. So one of the, we were just previously saying about like heavy lifting for market makers to come in.
Yeah.
So this is what they've got. This is what they've really got right. Not a lot of people will see this, particularly if you're just like a surface level investor and you're looking at the token. So their tooling to build in traditional market making APIs, I think you can go from 0 to set up in like 4 hours, I think they said. So there's no like, well, there's obviously a little bit of heavy lifting now, but the opportunity that is on chain trading against, less and less savvy individuals, for large market makers in like these emerging markets, spinning their algos up in like 4 hours is like, yeah, that's definitely doable. So that's like a big win for these guys. And token, I've mentioned this on many a solo stream that I've done, could have just been longing ETH or longing staked ETH and shorting ETH on Vertex for a while and just putting some volume through the book, and you'd have been earning Vertex rewards off the back of it. But the token actually hasn't gone live yet, and it's the announcement last week was the 13th of November till the 20th of November. They're going to have a TGE, liquidity bootstrapping auction. Lock will be, let me just work out what the distribution is. It will take 6 months to be 100% vested if you do participate, but it is in stages, and I want to just get this right before I talk a lot of shit to people and they complain that they're locked for 6 months. Where is it? I've got it here. Yeah, so initial LBA, so liquidity bootstrap auction position, lock up 60 days after the LBA ends. The first LBA unlock is 1/3 of a user's total LBA position. So you get you'll get after 60 days, you'll get a third, and then the remaining 2/3 are vested over the next 60 days. So yeah, it's not. I don't think it's unreasonable whatsoever. I think that's a pretty good way of doing it, to be honest. And I think it looks like it's going to be hosted on their own site. So that's like a week from now on the 13th. And you know what's really interesting that we haven't actually spoke about? I think airdrops and liquidity bootstrapping auctions are going to be the only way to get a token to market going forward, because of the Ripple case, where
securities and all that.
Because they got found. They kind of got thrown out because people were purchasing at a free market price where the price wasn't set and you were just kind of selling something. So I think LBs are perfect for that, and LBPs are perfect for that, because you will get a fluctuating price based on supply and demand of that specific token. So I'd imagine vast majority of everything going forward will be LBA, LBP, or a retrospective airdrop. But yeah, that's Vertex. What did I have as bear case? Bear case, I just kind of touched upon. There's like a large amount of competition entering the perp space, and there's a shitload of perps still to come online that I've been speaking to over the past couple of weeks, and I'm just like, oh, these guys are building the perp stacks. That's kind of came out of nowhere, but like I think it's one of the only things that's generating real revenues and cash flows. So yeah, a lot of competition. I think DYDX is probably going to come into its own a little bit more now with its own chain. We'll see if there's any friction with getting people over there, but you've also got to think about their liquid staking DYDX token and revenue share that's going to go through of there. And I don't know, it's a very competitive space, but I think these guys have got what it takes to kind of pull it off. So yeah, we'll have to see.
Yeah, that's a pretty cool one. I am interested how DYDX is going to do on their own chain. Should be fun to watch. I heard, or I saw the token unlocks. You see how massive they're about to be?
What is it?
Oh, I mean, just go to unlocked, like the token unlock schedule. It's about to get pretty insane for DYDX. So I expect a lot of marketing to come through pretty soon. But yeah. Anyway, Vertex is pretty cool. I'm excited to see how they do. I do wonder how much of their volume is due to farmers, but I guess we'll find out soon.
Yeah, there is always that. But I suppose we should do a full episode on this. But the supposed beauty of that is it's definitely a customer acquisition channel and a customer acquisition cost. And it's what I think it's kind of like amazing, really. Like that's kind of a crypto answer to how do you get people over there to try it. And even if they are going to try and farm it for a little bit, something might just click. Like similar to how my fascination with matcha for some reason. It's like that is ingrained in muscle memory now. If I like got a trade, I use matcha, and I think that's a little bit out of the ordinary. But you get people to use it enough, even trying to farm it, they might actually stick around and when they actually want to use it. So I don't know, but that is a full episode in and of itself.
Yeah, no, I think that, I mean, same thing happened with me in Stargate, so I get it.
Exactly. Yeah, I'm rooting everything through Stargate. I used to be a Synapse guy, but yeah, that's shit. Oh my god, I'm looking at this.
The unlocks.
Oh, yeah, that's not
about
good.
To get nutty.
Oh jeez. Oh well. What have you got next?
Okay. Yeah. Well, I mean, it's another perp fix, but it's a little bit different. A little different, guys. Stay with us, okay? It's Pear Protocol, like the fruit. So they do pair trading on Arbitrum. So how I found it, I think I found it first on Twitter, but they also have a really good podcast, the Crypto Narratives podcast, that goes through.
Yeah, it's great.
Kind of like
Hope's brilliant.
Oh yeah, for sure. These are really smart guys. But you want to go learn more about how traders think, definitely go check that one out. Crypto Narratives podcast. They raised a couple rounds. So they had $1.25 million seed round, and they did a public sale back in April, actually. So it's been a little while. They raised around $2.5 million for that too. Wish I knew about it by then, but alas, did not. So the real problem that they're trying to solve, pair trading, or it's also called spread trading, is very popular in TradFi. Like you want to go long Apple, short Microsoft, that kind of thing, and capture the difference. Like you think one asset's going to outperform another or underperform another, but it's kind of really hard to do in crypto these days. You can open like a position here and a position there, but it's not exactly what you want. So how Pear works, they source liquidity from other perps platforms like GMX to allow for like one-click trading. So you want to go long on ETH BTC, you can just one click long it. You want to go long link ETH, you can long that or short it. But actually their V2 is going to use Intents as well. So that's kind of cool. It's not going to rely on GMX or other perp platforms. They're going to use market makers like IntentX will. So you can mint that position. So say you have a long ETH BTC leveraged position, you can mint that and you can think like this position has some value. So you could in the future borrow against it. You could sell it OTC to somebody that wants that position for some reason, or you can use it in like other NFTFi applications. So there's already a lot of infrastructure out there for different financial applications of NFTs. So this is an NFT, so you'd be able to plug it into something like that. So I'm pretty excited about it. You can think that it has some narratives going for it. Like right now, we have this like mini ARB season with the short-term incentive proposals going out. So it could benefit from that because it's built on Arbitrum. So you could have some hype because it's using intents later on too. The token itself is going to also have revenue back to stakers, about 80% of it, and then 20% is going to the treasury, and also trading fee reduction. So kind of boilerplate, what you would expect for like a Perp Dex token these days. But I'm really excited about the possibility of just this pair trading, because I know a lot of people are either bullish or bearish the ETH BTC trade. Well, you can just go express it right there, and you don't have to jump through a lot of hoops to just artificially make a position up. You can just one click. Really cool. And I'm playing around with the beta right now. So it's really, really cool. And I know there's a lot of updates coming around soon. And I think the full launch is set pretty soon too. But bear case, I guess maybe it could be easier to pair trade on centralized exchanges, but maybe with intents coming, that changes. Maybe it's a lot easier and more effective to pair trade with intents. So I think Pair could carve out their own little niche there. But you could also look at, okay, maybe there's these on-chain intent-based protocols that do perp decks, like it's a perp dex. Maybe they just start plugging in pair trades. So maybe that swallows and gobbles up pair. So we'll see. I think it's a cool little space that they're carving out, though, and it's fun to use. So I'm excited for them to go to market here.
Yeah, I've known these guys for an awful lot of time now, and it's nice to see people in the UK creating interesting protocols. But yeah, I don't know if I'm supposed to say this, but I'll say it anyway. I think Huff is actually an advisor for IntentX. So
I didn't know that.
there is some very, and Huff's like, he knows his shit. Like we've spoken an awful lot in the past, and he's one of these people that is not just talking a lot of shit. He's not laughing about anything. I think he's had like traditional derivatives experience, and kind of just trust his opinion when I'm kind of looking for market commentary around a lot of stuff. So I really hope this does well. I'm kind of rooting for them, and I think it's it's similar to how we were just saying you can see how like the natural progression of derivatives markets by looking at like the spot markets. This also kind of looks like Perp's aggregator as well, where if this becomes like your go-to, your muscle memories, that it's like, I want to open this on, where do I go to find the best pricing, where's the best funding, and you naturally instinctively just begin to start going to Pear Protocol, because you're going to get great pricing across a lot of different assets. It just makes a lot of sense, and I think it could have a lot of legs. But yeah, maybe we should get Huff on. That'd be good to actually talk through, I think.
Oh, for sure. That'd be fun.
Yeah. Right, where am I at? So this so this is my final one. This is kind of a Perp Dex, but kind of not at the same time.
So this rename this episode Perp Dex we're excited about.
So my final one is Juicy Perp, and Juicy Perp is an NFT derivatives platform where you can effectively speculate on the price of an NFT floor price, long, short, or even they're going to have these NFT battles, which is effectively like a binary option. So will the price of this increase or decrease over this allotted time period? And this was, I won't mention any names, but there's a VC friend in the industry who is looking very, very closely at Juicy Perp, and they kind of wanted our opinion on it because we covered quite a lot of NFT fi stuff in the past. And we were very, very close to the NFT Perp guys and did a lot of content around that. So the issue with that was the virtual AMM model didn't necessarily work on NFT Perp. And there's a few reasons, right, why you haven't really seen, like, if you think about it, it's a great idea. Like, people want to speculate, like, even today, people would have definitely wanted to speculate on Bored Ape price because there was like the catalyst of yesterday where they've tried to make everyone blind so they can't hand their keys over to kind of phishing links and shit like that. Maybe that's the antidote to Bored Ape members not using all their money, just make them blind. So there's definitely a demand for this, but there isn't a great venue for it. And I think previous structures of the counterparty, the people have used the AMM in the past, and just hasn't worked. So one of the other main problems, which you could probably figure out if you looked at it long enough, is the price feed data and the latency around it. There just really isn't any great NFT price feed oracles that are feeding into these protocols to enable it to enable perps to act in the way that they should, and it could be quite easily manipulated. And I think that's where NFT Perp V1 went wrong, and like a lot of LPs lost a shitload of money, and I think a lot of floor prices were getting skewed, and so it's more of an infrastructure. Yeah, it's more of an infrastructure problem than you could initially think. So these guys are effectively going to have just your simple deposit in liquidity providers taking the opposite side of the trade style, like GL, I suppose like a GLP style model, or just like a basic kind of liquidity, single side liquidity pool model. Initially, they're going to launch with the binary options, so these NFT battles, where I think this is actually really smart because, one, you're definitely going to be able to speculate on the price of an NFT floor price over an allotted period of time. Maybe it's a day, maybe it's a week, maybe it's a month. But the way that they're structuring it as well is you're going to have like dual battles where you might have but quite interesting that we just spoke about Pear Protocol. Who will outperform? Will My Ladies out-compete Pudgies over the next month or the next couple of days? And what's really interesting about that is you can definitely see that striking up conversation on social media and getting additional organic virality because you're tapping into two really kind of dialed in communities around that. And then let's say we had 20 different NFT collections and there was markets for, I don't know, Pudgies versus Bored Ape. Like you can see how quickly that could become
that's cool.
a thing that people would latch onto. So I think they've done really, really well on that. I, for one, just want a venue to be able to long and short NFTs. I sometimes feel guilty when I buy NFTs and sell them. I don't know what that is. I have no problem absolutely nuking any position I have, but I don't know what it is about NFTs. I always just feel a bit guilty if I'd like put them up for sale.
Well, it's that and Frank keys, right? It's like, sorry, man. I'm
you can't sell those. So I'd like to just speculate on price because I think there's a lot of catalysts that happen in the NFT space, and I think you're probably going to see the NFT market take a new kind of direction with regards to, like, if you look at what Pudgies have done and what Luke has done with Pudgies and getting them into like consumers' hands, and I think like Dokio on Avalanche are like looking to do something similar. I think that'll probably be like the new meta of things, and that's kind of what everyone promised in the NFT space anyway. But it looks like Luke is probably the only one who's actually delivered on that. But I also think we're probably like on the narrative aspect of this kind of thesis. I think we definitely hit rock bottom with regards to NFTs. I think we're definitely going to start seeing a slow resurgence. I think like even just stupid stuff like Simpsons episode where Bart got turned into an NFT, which is hilarious.
Well, it's in the mind space, right? It's good.
Well, yeah, and there's just a few more things like Blur Season 2 is on the horizon. The Bored Ape thing I made fun of, it's like it's nothing to make fun of, but it is also quite funny at the same time. OpenSea, yeah, just like fumbling the bag consistently. There's like them and MetaMask who are just like.
Oh, OpenSea just cut like half their positions, didn't they?
Yeah. I just
It's
don't
rough.
get it.
Do you think we're at the bottom for NFTs? It's like capitulation.
Yeah, I think the bottom's in personally, but I also think there's going to be a lot of shit that gets left at the bottom.
Yes.
Stuff will definitely continue to gain traction again. I think there's definitely going to be the OG stuff that stands the test of time, and I think Pudgies is a real good prime example. I think Kanpai Pandas is a real good example.
Yeah, you gotta look for communities too with NFTs. Like Miladies have a pretty strong and vocal community too.
Absolutely. Yeah, absolutely. And I think there's a whole meta around that, but I think gone are the days where people are happy to part ways with ETH or SOL or AVAX or whatever token. People are raising in for like the promises of a roadmap. I think there's going to be a lot of financialization happen. I think people want to speculate, whether that's options, whether that's perps, whether that's whatever the hell people come up with. But yeah, I've kind of got the opinion that we've probably bottomed in the NFT market, and we need to wait for like the wealth effect and money to trickle down into these more kind of speculative areas. But you're probably also going to see a lot of gaming related NFTs pop off, because I think we're probably coming into the beginnings of some real good games that are coming online.
Really?
Like your Shrapnel and Off the Grid, and like TSM are creating their own subnet and stuff like that. So there's a lot of stuff like Aurora on Solana looks like it's getting near. So like all these stuff that got like raise a shit ton of money, and a lot of people released an NFT collection to keep the hounds at the gates and show that they were doing something, and also probably raise a little bit of capital. Like there's a lot that's bubbling under the surface, and I think like the financialization aspect of it, if executed correctly, could be big. And I think Juicy Perp look, from a technical perspective and from a marketing perspective, they look like they're ticking all the boxes personally for me. No token yet. I'll suppose we can comment back on that when we know a little bit more. And like my bear case is, you don't see a lot of speculation happening, but I can't see that happening if there's a good venue to actually execute. The only real issue I do foresee is if the Oracle just isn't up to scratch, or there's a reason that the price feed Oracle hasn't been pulled off previously. But I suppose the other aspect is if providing liquidity just is categorically just unprofitable, and obviously there's no liquidity to trade. But yeah, I don't know. I'm quietly optimistic about this one.
NFT perps are tough just because there's not a lot of volume to go through, so you can think maybe it's not as hard to manipulate the price, just because there's not a lot of not a lot of volume to break through. But yeah, definitely hope something like this exists, because don't have to shell out 50 ETH if I want to express a position.
Exactly. I suppose that's I know everyone trying to fractionalize everything. They thought that was the way that you allowed smaller positions to kind of express their desire for a certain collection. But like this is a kind of the same thing, but in derivative fashion. I think it's if funding makes sense over a long period of time, I can definitely imagine people picking this up. And like if there's any composability across the actual position, that could be interesting too. But yeah, there's a whole market of really smart builders building in this space, and I really want to see it do well. It's just someone's going to pull it off, and I just don't know who. But like my kind of initial kind of research is looking promising for Juicy Perp.
Yeah, definitely one to watch. I mean, the more like financial primitives that get plugged into NFTFi, the better. So hopefully they do well.
Here. So yeah, we'll do this. As I say, I could have pulled out 30, 40 projects today, and I apologize that we brought up one lending and borrowing around LSD, LRT. The rest were DEX, the Perps DEXs, and then we had one NFT 5 project. But we'll try and shake it up a little bit next time. It's just, I think a lot of these are about to come online, so it was quite topical, and we felt bad not telling people about them. So
Exactly.
Yeah, so we'll do it again. We'll try and make it a regular thing. And if there's any you'd like to see us kind of speak about, be prepared. We might roast it. So
that could be fun too. Roasting all of the bad ideas, or why we don't like some ideas over others.
Yeah, why we like it, why we don't like it. Just leave it all in the comments. We check them all. We'll get back to you on absolutely everything. And yeah, thanks for joining us. If you feel generous, give us like a like and subscribe and all that good stuff that I'm supposed to say as a host, which I always forget to do. But yeah, 563, thanks for joining us again, and don't know what we're going to do next week. I'll leave that up to you. You can decide.
We'll figure it out. Now it's good to be back.
Absolutely. Right, thanks a lot, everyone, and we'll see you next time. Take it easy.